Hello friends, welcome to my channel and thanks for watching this video. So welcome to another session of USA Weekly Market Report series. Now what we have discussed last week was the volatility, which is I would say evolving, and the week that has just passed was literally a confirmation for that, and we have seen massive swings on both the sides where on the first half of the week that has just passed, filled with lots of downside, and then as far as the Friday is concerned, you can clearly see a sharp bounce back as well. So things are happening very quickly, and moves are very sharp on either of the side. So if you are somebody who is for long term, that's a different thing. But if you are somebody who is for short term or a trader, and if you are not professional and don't know how to deal with this kind of situation, it's going to cost you a lot I would say. And even with the close, you can clearly see VIX closed above 19, which is not at all a good sign because it clearly indicates that the volatility remains on the higher side, apart from a 7% fall as far as the current number of weeks is concerned. And apart from that, there are a lot which is going on as far as geopolitics, geoeconomics, and bilateral I would say economics and policies across the globe. Okay, so things are getting volatile, I would say. It's not tough, but it's really volatile because we are literally in the last 1 decade, we have literally moved from one end to another as far as the economics and stock market is concerned. Now let us see what has happened and what may probably happen going forward, starting with the current price chart of Dow Jones. And we have seen volatility, but it remains within the range. I have explained the big trend, and if you don't watch my previous video, you can go and please check it out. Uh, but as far as the current or very immediate trend is concerned, Dow Jones remains within the range, so we cannot go beyond the range unless there is a big expansion. So there is a consolidation which is going on, and unless we have an expansion beyond this range, you cannot say that whether Dow Jones will move higher or move lower. That's something which time will tell. Right now, we have this particular range which is active, and Dow Jones is trading in between this range where we have 41,880 as our support and 41,727 as far as the stop loss is concerned. Similarly, what we have on the upside are 44,981 and 45,148 or 150 as far as the target or resistance on the upside is concerned. So basically, Dow Jones remains within this highlighted section, and that is what is currently active. Okay, focus within this range, and it does not mean that because the close of Dow Jones was in green, so it cannot move lower. If it is trading within a range, so both possibilities exist for an upside as well as for a downside. Now, as far as the next chart is concerned, which is Nasdaq Composite, let me show it to you, which is extremely volatile, and the way it has fallen was indeed quite sharp. And you can clearly see, after testing the 200-day moving average or this green line, we have seen a bounce back in Nasdaq. That's what has happened as far as the price chart of Nasdaq is concerned. So obviously, because we are talking about the near term trend, we have to take the current support as a reference point before going any further. So what I'm going to do, if I consider the low as a current support, a line like this exists. Now, considering these two lines as our support line for the time being, you can expect an upside. Now, last week I was talking about the downside, but the downside was so sharp that it literally hits 18,400, which is the 200-day moving average, and from there we can clearly see a bounce back. So for the time being, this is your reference point, and make sure that Nasdaq Composite continue to trade and sustain above 18,400 and 18,687, and Nasdaq is trading above or closed above 18,687. Now you can expect a bounce back. So you can clearly see things are changing. Even within the range, moves are so sharp that we have seen a quick downside, and the way it has started moving higher, you can see an upside as well, where if Nasdaq continue to trade and sustain above 18,400 and 18,687, then it may again swing back towards 20,165 and 20,260. Anything beyond 20,260 is subjected to the price behavior of Nasdaq, and we will see what will happen thereafter. But if it again falls below, if Nasdaq again falls below 18,400 or lower, then you will see further downside which will open up. So please understand the risk as well. Now, as far as S&P 500 is concerned, so obviously it is the most balanced index, and yeah, we are looking at the current positioning of this particular stock. You have to, or we have to, remain within the range, because you can clearly see a bounce back over here. So these two lines remains the lower end of the range, and you can clearly see a bounce back from its previous support, and on the upside you have a resistance line. So for as far as S&P 500 is concerned, we have our support at 5845 and stop loss at 5780. If it falls below 5780, then you will see further downside. Similarly, what do we have on the upside are 6112, and we have 6151 or 6152 as far as our target or resistance on the upside is concerned. So stay within the range. So in all three circumstances, what we have seen is a bounce back. Now, whatever has happened in the last 1 week as far as the correction is concerned, is it just a blip, or is there is something else apart from that blip? If it is just a blip and the correction has ended, then you will see an upside. But if it is just the start of a correction, then you will see volatility. As far as the current close of VIX is concerned, which is above 19, okay, so it indicates volatility. So we have to remain a bit more caution before simply thinking only about the upside. That's the most important thing. Yes, all the index or all three indices are indicating a bounce back, so obviously we have to go with the flow. But is it the end of the correction? That is not clear as of now. Now let us go and check out the dollar index, because dollar index is not going anywhere. You can clearly see again a bounce back. Okay, this bounce back makes things much more volatile across, and dollar index won't let thing happen. And obviously if it continue to strengthen enough, then it will create a ripple impact, not only in the global market, which it already does, but in the US as well, because currency beyond a certain point, or a stronger currency beyond a certain point, does not looks very good. So right now, if dollar index continue to trade and sustain above these two levels, which are our support and stop loss, 106.6 and 106.19 or 106.2. So if it continue to trade and sustain above all these levels, then we're gonna have our first target at 108, and you will see a price movement up to or in between 110 and 110.24. So this possibility exists even with the current volatility and the current price action. So market is behaving in a certain manner, and there are reasons for that, and reasons are not good enough. Which is definitely holding the market within a range. But as I told you, currency beyond, or stronger currency beyond a certain point, is not at all a good thing. Okay, not only for a particular economy who is ruling, because dollar is a reserve currency as of now. So obviously it will have an impact not only in the global market but also in the US market as well. One more important thing is WTI crude. Let us see uh, what are the indications we are getting from there, just to be sure that things are looking good as of now. So this is the price chart of crude oil futures, light crude oil futures, and you can clearly see it's trading within a range. Okay, it's still trading within a range. It's not going anywhere, which is, by the way, a good sign, at least from one end, because it will have a ripple impact across the globe. But because it is trading within a range, so it is at least a good sign for now. So if it continue to trade and sustain within this range, it will have a positive impact, where we have 66 as our support and 62 on the downside, which is your stop loss, and on the upside we have 81 and 87 for the time being. If it falls below 62 or lower, downside may resume once again. So net we have some positive indications from the equity market, but at the same time, dollar index is something which is not giving us a clear indication. That's number one. Number two, let the market settle down first before thinking or before going any further. So this is the end of the video. Thanks for watching.